What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Apple stock, ticker symbol AAPL, on a variety of time frames in anticipation of the next trading day, Friday, March 22nd. All right, guys, so Apple stock here today is down $7.30 a share. That's minus 4.09%. It is up a little bit in the after hours. Listen, as always, take after hours movement with a grain of salt. Whether it's pumping or dumping, it's very easy to move stocks in the after hours, although I will say Apple is likely one of the toughest things to move, regardless of time of day, of course, simply due to sheer market cap, but volume is very low in the after hours regardless, so it is easier, quote-unquote, to move things in the after hours than it is intraday, so just take that after hours movement with a grain of salt. Now, of course, a lot of today's movement, the majority of today's movement likely, is being driven by the Department of Justice suing Apple, saying that their iPhone ecosystem is a monopoly. And we know that when we get news like that, we are going to see a reaction. It's essentially, usually the initial reaction to that is going to be like funds, institutions, maybe some retail investors, though we know that a lot of the price action is in a stock like Apple is going to be driven by funds and institutions. Trimming, and it's usually going to be those firms that are unable to take on that specific risk at that time. Maybe they're very overweight Apple, and if something crazy were to happen with Apple and this lawsuit, they would post, their first losing quarter in so-and-so years, and their investors would be upset. You have to understand, it's just a pricing out of a little bit of that risk. But let's do what we do best here and get started with our daily ritual, the volume profile on the 5-minute chart. We're looking for hidden bias here, right? Things that aren't incredibly obvious or really even visible simply by looking at price action. So I need changes in volume, okay? I need those to be obvious as well. I need those to correlate with obvious moves in stock price. And I need the volume on those moves in stock price to be outside of what is considered contextual for that particular time of day on any average day. So let's start by circling our moves here quick. I'm really interested in this fade off the open. Okay, and then really I want to look at this one as well. All right. So bears, you guys are of course it's a red day, so you guys are of course looking for as much bias as possible to the selling side that fits your thesis, because this is another layer of the onion. We're peeling back a layer and now looking at this as a separate entity. Bulls, the day's already red, right? So you guys are ideally looking for very little bias, since a bearish bias would be the expectation. So let's take a look here and start looking from left to right. Now this opening candle, it's very typical to see. We see a quick fade in volume. That's very contextual. All right. Now here, you guys know, I like to see at least 3 minimum consecutive candles that are not contextual for that particular time of day. Okay. This is getting broken up because we had kind of a short-term bottoming candle while we took a pause and then faded again. And that broke up this volume profile. So to me, there's really not a lot of bias there, at least anything worth mentioning. Now, as we move on into the kind of low of that particular leg down, and then we got a little bit of a bounce and consolidation sideways for a few minutes, we saw 5 consecutive red candles, a little bit higher than the surrounding regions, right? And then finish that off with that kind of bottoming, bigger green candle again, bottoming off with that leg. Now, to me, there's a couple ways you could look at this. I think the way that I'm going to look at this is this whole section right here, right, as kind of its own move. The volume picked up once the move started to pick up even more to the downside, and the volume dried up once the move dried up. Okay. Now, we had, what is that? 9 candles. We got a little bit of a fade in volume, fine, in the middle of it, right? 2 out of the 9 candles were green, 7 out of the 9 were red, and we saw out of context height of volume, in this case, throughout the whole thing. So what I'm comfortable labeling this as is a very slight bullish bias. It's really not all that clean, to be truthful, but it's certainly there. But it gets broken up right? We see a big fade in the middle of it as the stock kind of takes a breather. Now you may be asking, okay, well, what would a clean bearish bias look like? And really, the clean bearish bias would have looked like 3, 4, 5 consecutive red candles, 2.5 million a piece, right? We just aren't really seeing that clean of a bias, but there's certainly a small bearish bias there, which is, you know, I probably would have expected a little bit more given the downside nature of that move, aggressive nature of that move. Now, this little downside move here is really the only other thing I'm interested in, and then I also want to look at this into the close move a little bit. You see here, there's nothing here. There's one pop in volume on a bigger red candle. My problem with that is you end up with too much of a risk of that fooled by randomness. So, you know, bears, I'm sorry, there's really not a lot of bias in this downside move aside from that one little pop in candle, which again, I'm not comfortable labeling that. And then into the close, you know, bulls, it's contextual to see a rise in volume into the close. Now, this big red candle, 9 million shares. A lot of you guys are likely looking at that. Bears, you're like, wow, that's really good to see. And bulls, you're like, I don't like the look of that. Well, this is really common, and we've been seeing this a lot as of late on almost every blue chip stock. It's always that first 5-minute bar after the close. I believe that this is heavy rebalancing from funds and institutions because it's very often just a small little candle with a few wicks. I think this is just heavy algorithmic buying and selling, end of day rebalancing the firm's positioning, and it rarely ends up in much movement in the actual stock at all. It's just a big volume pump as a lot of shares trade hands. So whether that candle was red or green, I really don't see any reason to be afraid of that at all. So interesting volume profile to say the least. Let's take a look now at the 30-minute. These are going to be the psychological, self-fulfilling prophecy levels that I'm paying extremely close attention to here, not only for Apple, but for the entire market as well, since Apple's such a driver. Tomorrow, Friday. Now look, Apple did, here on the 30-minute, break downside below the 50 period and the 200 period moving average on the 30-minute chart. Now, why do I care? The 30-minute is a very popular time frame. What are the two most popular indicators we can possibly put on the 30-minute? You'll notice that my charts are very simple. Okay? Well, that white line's the 50 period, that gray line's the 200 period. This chart has lots of eyeballs. Self-fulfilling prophecy mentality. But we made a big intraday break beneath both of those. It was on news. However, this wasn't, of course, really a technical break. But I would like to see a technical reclaim. Now, understand that we are currently about 1.35% away from that 200 period. And we're about, as of right now at least, 1.85% away from that 50 period. I do expect that 50 period to be a little bit lower into the open tomorrow, likely. Not unlikely that that is the case. Now, bears, let's start with you guys here. Your best case scenario, if you're a bear, you want to see that 50 period get because that's going to be the quicker moving average, right? So crossover, but not for the sake of the crossover, simply because you want a psychological barrier getting as low as possible, as quickly as possible, to kind of reform a ceiling as low as possible to lead to some potential trouble heading back upside, because you guys want to kind of hold this downside move. How do you do that? How do you put doubt into bulls' minds? Well, you create psychological barriers low, quickly, after a big downside move. So bulls, what would you guys be looking for? Ideally, you want that 50 period to stay a little bit higher, perhaps flatten out. And really what would be helpful is to just see this stock head upside and reclaim both of these as quickly as possible. But understand that that is a 1.85% move, at least as of right now. Might be a little bit lower tomorrow to pull that off. But second day movement after a big news event. I mean, today was a 4% day. Not uncommon to see a little bit more volatility. So that's not crazy. We have to consider that for a single day possibility. Now let's move on to the 4-hour chart here and take a look. You can see on the 4-hour, we did dump off below the 50 period here on the 4-hour, but we are relatively close to it. Okay, we're approximately 0.85% or so, less than 1% away from making a retest of that 50 period. Bulls, a reclaim of that 50 period here on the 4-hour chart. You know, it's curled upside recently. That's not bad to see. A reclaim of that on high volume, and then a low volume retest, and boom, a high volume confirmation of that test. That'd be a beautiful thing to see. Bears, any upside test of that 50 period here on the 4-hour chart. you guys are going to want to see a rejection. I don't care if I'm a bear, what kind of volume the test is made on, as long as the rejection is on a heavy, heavy volume. Okay, really simple here on the 4 hour, but let's take a look now at the most important chart of all, the daily. This one paints a very clear picture. It's not going to show after hours movement, but that's okay. Listen, tomorrow, I think it's really clear that we have seen this level form here as of late, right around that like 170 region. Now, listen, it's going to be a range. Okay, it's never perfect. It's never an exact penny. I'm going to call that a range between like 169.75 and like 170 and a quarter, maybe even 170.50. And we're just going to call that 170. Now, I think tomorrow is kind of the battle of 170. Bulls, you have to understand that there's a lot of bears that are likely expecting second day continuation, just because that's how you're going to be wired. If you have a big move in your favor on one day, a lot of people look for continuation the next day. So I really think it's the battle of 170 tomorrow. Bulls, any test of 170, I would love to close above 170, really above 170 and a quarter, ideally. Okay, spend as little time beneath there as possible. Ideally none, right? But if we dip below 170, 169.75, spend as little time beneath there as possible and bounce back up above that area on big volume. Okay, show some resilience to that. Bears. A downside break on big volume beneath 170, perhaps beneath 169.75, and holding beneath there for as much time as possible here tomorrow into the weekend would be a good sign. Now, I don't mean break beneath 170 with 4 minutes to spare and then you're partying all weekend. That's not very definitive, right? There's a very small sample size agreeing with that. I mean, listen, Apple, there's always a big sample size, but 3 minutes means nothing. You want a lot of time spent in a region, then you have a big market participant sample size coming in and saying, okay, listen, we agree with what's currently going on. That is the ideal scenario. Now, implied volatility here. It did spike a little bit today. Okay, just understand that the higher IV goes, this part's important, in comparison to your intended trade time frame, right? The higher IV goes in comparison to that, the higher the probability of IV crush becoming a risk. And the lower IV is, the more favorable those conditions are for new options buyers to come in and buy contracts, right? Now, this is my favorite part of the video. Options bias. This is really interesting. We had 2.25 approximately, 2.25 million total contracts traded. That's a good sample size. That's a lot. Of those contracts today, 1.26 million were calls and 986,000 were puts. So we are seeing a call side bias on the overall ratio. The short-term speculators, those short-term bets being placed at 0 to 20 delta range, 509,000 calls and 351,000 puts. So not only are we seeing a call side bias on the overall ratio, we are also seeing a call side bias out of the short-term speculators. Listen, if you got value out of this video, please subscribe to the channel. I greatly appreciate it, and I'll see you in the next one.